Well, happy election day. This is Rob Reinhold. It's the market roundup, and let's get into it. Surprisingly, today was a busy day, in spite of there being very big news coming up tonight. In this session, we're going to go over the news of the day. We're going to talk about what's ahead, and of course, it's all going to be about the U.S. presidential and congressional elections.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Okay, so here we are, the day of the U.S. presidential and congressional elections. And typically, these are bullish days. So this is the fifth straight presidential election day gain. So it's happened 5 times before, so basically over the last 20 years. But this one was larger in return. So it's pretty typical to have an up day on this day. But what wasn't typical was that we had some really good news, and that likely came from this ISM services number that absolutely crushed the estimates at 56. The estimates were for 53. This is a very strong number. Remember, ISM services is 2/3 of the economy. This is a very healthy sign of the U.S. economy right now. As you can see, the Dow picked up 1%, the S&P picked up 1.3%, the Qs 1.43%, and the Russell up almost 2%. Oil and gold, everything was up across the board. And if you take a look at the advanced decline line, very strong numbers. This was an 80% up day. That's pretty uncommon. That's a big deal here. So again, most stocks were up. But when we take a look at how many stocks are trading above or below the 50-day moving average, it's basically about 50-50, leaning a little bit bullish. So let's take a look at these charts and see really what has happened here over this last day. And has anything really broken down or broken up on a technical basis? We talked about this in the trading room, how we had come down to support. We found some support, but had a pretty lousy candle on Friday. Yesterday was, again, another messy day right at support. It was almost looking like it was going to break for a minute, recovered. This is a very, very healthy candle. Opened up at the low, closed at the high. There was buying all day long. But let's take a look at where we are, because we just bounced off of the 50-day moving average and off of major support. Okay. Next, we got to get above this next support line to really become more bullish. So I'm still at a 0 here, or maybe give it a +1. We really got to break through this 57.95, 5800. If we can break above that and hold, this is going to tell me that this is likely going to be like just a very short bear flag pattern or a bull flag pattern, and we're likely to probably get some new highs off of this. If we cannot break above this 5800, then it tells me we're still at a 0, and whichever one of these points breaks first is going to be a sign of whether we should be bullish or bearish. So it's a little too early. Today was a great candle if you're bullish, but it is not cleared out on the technicals yet. If we take a look at the Qs here, really similar story. We're still between the moving averages. We've got a little bit of a support and resistance line right here at 493 on the Qs. So a push up above this and a hold up above this, I think you could start to take a look at seeing new highs on this index. If we get hit tomorrow, if we go down or don't break out, then again, it's just in this area. Whichever one breaks first is going to tell us whether we need to be bullish or bearish. And if we take a look at that heat map, it's all green. Again, this was an 80% up day. That's a very, very strong day. There was buying across the board. I would love to come on and be like super bullish, but we can't yet. We talked about the technicals. We need 5,800 to break and hold. That is the key to going up to a +2 where we can get a little bit more bullish. If you listen to the trading room this last weekend, I basically said that the weekly outlook was going to be somewhere between a -1.5 and up 2.5. So basically I was saying that there was asymmetric risk where I think there was a larger chance of there being a big move up than a big move down. Look, this is all just speculation. Obviously, we're going into where we're going to see the results of the election. there could be wild swings here, but this was my analysis saying, hey, you know what? I think there's a better chance of this being a bullish outcome than a bearish outcome. So let's take a look at a few potential trades. Again, I'm not going to share a lot of trades with you because we're still not in the point where we can put the pedal to the metal, to where we say, hey, we have a technical confirmation of where we're going. Right now, we're still between moving averages. So I just have two trades for you. I've got one bull and one bear. And look, I found so many bullish trades and I found a decent number of bearish trades. But whenever I take a look at the markets and whenever I go in and look for potential trades, if I'm like really bullish on the market, but I can't find any good trades, it actually tells me, hey, your outlook might not be correct. Or I go in and I find a whole lot more bearish trades than bullish trades. Again, it's a sign, hey, maybe your outlook's not correct. My outlook was more bullish than bearish, and I definitely found a ton more bullish trade setups than bearish ones. So let's take a look at our first bull here. This is in the tech sector. This is Marvell Technologies. I really like this chart here. We've got a high base. And yes, remember last Thursday we had that nasty day, came down, hit the bottom of this range, but bounced back up. On Friday, had a nice bounce up and almost breakout, but it just couldn't break out because, again, the market didn't run. Here we have a decent candle on a breakout here. So look, this one to me looks very bullish. We want to say, okay, where is the target on this one? I think 90. 90 is the target. So you've got lots of options available on this. You could do an 86.90. You could do an 86.89. You could do a whole bunch, but I think 90 is basically the top of the range here. So whatever trade you want to do, you can be, again, +2. That would probably be like an 86.90 spread. If you wanted to be more non-directional, then I think you could take a look at something like the 87.85 to where you were getting a lot of positive theta on this, and it just has to not go down. But this one, to me, it looks like it wants to go regardless of what the market is doing. Because like I said, the real ugly day we had last week, it held in there quite nicely. And on the bearish side here, we've got EDU, New Oriental Education and Technology. We're seeing some weakness in Chinese names, and this is one of those Chinese names. You can see we had this big run, and again, all Chinese stocks had a monster run, and you can see they gave it all back. So here we are, we gave it all back, and now we're doing a low base right down here. Look, I'm not saying this thing's going to drop and crash and go down to 50, but what I do like here, I do like that $60 area. So for me, I'm looking at like a bear call spread, a 60-63 bear call spread, a 60-62 bear call spread, or a bear put spread, doesn't matter which one. I don't want to go much past that 60, and frankly, if someone said, Rob, I just want to do a 61-63, hey, that's perfectly fine. That's a perfectly fine trade. You're going to bring in 90, 95 cents, so you'll have a $1.05, $1.10 worth of risk and a little bit of positive theta. I like that trade quite a bit. Like I said, I didn't want to show you too many trades because we are still in this period of volatility. Yes, we can all talk about what our expectations are, but nobody knows what's going to happen. Nobody knows. It's going to be wild, and I think there's going to be some volatility here in the next couple of days as some results come in on the downside or on the upside. Don't really know which one. Tonight, we're going to start to get the election results roll in when the polls close on the East Coast at 9 p.m. Eastern Time. Now, of course, states like New York and states like Massachusetts, they're going to be called really early because everyone knows where they're going. But then we have states like North Carolina and Georgia and Pennsylvania, which probably won't be called for at least a couple days. And as we talked about this and as you've read, this election is going to come down to about 7 states. We know where all the other states are voting. We know which ones are going to be red. We won't know which ones are going to be blue. There's about 7 states that are in play right now, and they're all within the margin of error in the polls, meaning that either candidate technically can win them. I talked a little bit about how they count votes in Pennsylvania and other states, how they have rules to how they count votes. We may not know who won these elections until Friday. We just have to accept that. That's the way it is. What's going to happen, though, is that they're going to be calling states. And it could happen in the middle of the night. It could happen during the day. And once they start calling these states, all of a sudden it becomes more and more likely that one of the candidates is going to win until basically it's a done deal. And once it's a done deal, then the market is going to say, okay, now we know who the president is. Now we know what Congress is like. Now we're going to make our changes, if there's any changes to be made. On the trading room, I said, I think that the market is going to go up if it's a clear victory for either candidate. Yes, there will be some sectors that don't do as well, but I really think the best case scenario was for a blowout from one or the other. The worst thing is going to be a contested election where we don't have the results Friday. Or maybe we have results, but there is, some disagreements and even some political violence like we saw last time. Look, that's going to be the worst case scenario. And I think under that scenario, I think the markets are probably going to start to sell off on Friday, if that's what it's looking like is going to happen. So buckle up, everybody. I have no idea what's going to happen. We're just going to react to it. As far as economic reports go tomorrow, who cares? Who cares? Everyone's going to completely ignore them. No one's going to be making any judgment calls off of that. We do have a surprising amount of earnings. If you do have any of these stocks, check the earnings reports. Make sure you are in the right positions on those. All right. Hopefully everyone has a fun time watching the election results. And yes, I know some people will be sad, some people will be happy, but guess what? As a trader, you don't care. You are agnostic. You are simply going to try to be on the right side of the trade, period. That is your job as a trader, to be on the right side of the trade. Thanks for joining me. Goodbye, everyone.